Bitcoin hit a new all-time high ATH of $123,091 yesterday and is currently trading at $117,000. Some traders and analysts believe this is not the end, but rather the beginning of a much larger rally. Let's look at 3 simple reasons why some people think the bull run is really just beginning. Bitcoin still has a lot of room to growth. Chart below shows how Bitcoin typically increases in price over time. It looks like a large channel that the price fluctuates up and down within. While $123,091 is a new record, Bitcoin is still near the bottom of that channel. Previously, when Bitcoin really exploded, it went to the top of the channel, and that's when the huge gains happened. So while the price is currently at an all-time high, compared to Bitcoin's gains in previous bull cycles, we may still be in the early stages. RSI chart is giving bullish signal. Relative Strength Index RSI is a tool that tells you whether the market is overbought or oversold. When the RSI rises too high, it usually indicates that the coin is overbought. Too many people buying too quickly, and this often signals an impending price correction. Right now, as Bitcoin analyst AO noted, Bitcoin's RSI is rising, but not too high yet. In fact, this slow and steady RSI pattern is very similar to what we saw before the 2021 bull run. It shows that people are buying, but the rally may still have some momentum. This is a positive sign. Many traders may get liquidated as Bitcoin surpasses $120,000. Some traders are betting on Bitcoin to fall. They use leverage, which means they borrow money to bet on BTC going down. If Bitcoin goes up instead of down, they start losing money very quickly. If the price goes up too much, they get liquidated, which means their positions are forced to close. But the fun doesn't stop there. When short orders are liquidated, it creates a positive domino effect on Bitcoin price, as the system automatically buys BTC to cover the missing positions. Crypto, a popular trader, shared a map showing that there are many traders in the $120,000 to $125,000 area. This area is filled with liquidity clusters. If Bitcoin continues to rise, all these traders could get squeezed out. That would create more buying pressure, pushing the price even higher, like a rocket fueling fire. Derivatives market optimist Glest. Revertov's raids shows that open interest OI has increased to over $87 billion, while funding rate payments have almost doubled to $2.1 million, indicating growing confidence from traders holding long positions. On the other hand, the options market recorded a controlled change, with OI soaring and skew turning negative, reflecting growing bullish sentiment among traders. The market is currently in a period of high yields and strong confidence, supported by both derivatives and spot markets, Glassnode said. However, while the outlook remains bullish, the massive increase in leverage puts the market at risk of large price swings, parallel to the change in spot and derivatives trading volumes. Bitcoin demand from accumulation wallets, those that have never spent any BTC, also hit a new record high. These wallets accumulated about 248,000 BTC in July, equivalent to about $29.5 billion, significantly higher than the monthly average of 164,000 BTC, indicating a surge in buying activity, according to data from CryptoQuant. Despite BTC's continued all-time highs, some long-term investors are quietly accumulating for now. CryptoQuant analyst Darkfrost wrote on Monday, this surge in demand also coincides with a wave of inflows into spot Bitcoin ETFs, which saw $2.7 billion in inflows last week. Has Bitcoin price peaked? The current sentiment might lead many to think that the price has topped out. $123,091 is a huge number, after all. But looking at the charts and technical signals, things are not showing signs of a top yet. The large price channel still has room to rise. RSI is rising, but not yet in overheated territory. At the same time, there is still fuel above, in the form of liquidations. All of this signals that the current rally is not over yet. In fact, the biggest breakout may still be ahead. The BTC price chart reflects the same. According to the trend-based Fibonacci extension indicator, BTC is currently trading below a key resistance level at $121,623. A break of this level would open the door for a further move towards the $136,000 region. A more optimistic target would be $160,000, which also looks feasible based on the chart above. However, a drop below $112,000 would invalidate the uptrend. Selling activity poses a pullback risk along with the price increase. Selling pressure has also increased. The BTC Exchange Net Flow Index, which measures the difference between the amount of Bitcoin flowing into and out of exchanges, shows that inflows to centralized exchanges have far exceeded outflows over the past 4 days. This comes as the supply of profitable BTC surges, prompting investors to take some profits. This acceleration of the trend could force Bitcoin prices to correct, leading to the liquidation of some long positions. We maintain a structurally bullish view on BTC, supported by continued institutional inflows and favorable macro fundamentals. However, at current levels, we prefer to be selective and not chase the upside, rather position for a pullback should it occur. QCP analysts wrote in a note to investors on Monday,